hope he was. I hope he was. What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, I am the bearded boy wonder, Dave Bartosiak, and today, my friends, we are talking about a little company called Momo, ticker, you guessed it, M-O-M-O. This company is at the intersection of China, mobile, gaming, social. And if you haven't heard of it, I've had it in Home Run Investor for a while now. We're up pretty good on it. But that's not going to color my judgment here. We're just going to look at the facts, obviously, and see if there's any sort of opportunity that's presenting itself as a result of these earnings. Now, before I get into that, I was talking to a lot of you guys in the chat, and everybody's freaking out as the market's freaking out here, right? So let's kind of put some perspective to this, right? And I'm going to have a Dave's Daily Dive tonight where I'll talk about this a little bit, but the market's come down to retest this 50-day moving average, right? As it did in June, late June, early July, as it did in May, as it dipped under in April. The last time we really had a sustained break underneath that moving average was September and October, okay? So there's one part of this. The other part is what kicked off this volatility this morning, arguably, was rumors that Gary Cohn was going to jump ship. What does that really mean, though? So this is all about Trump's ability to pass anything, really. Before, the market didn't care. We didn't worry about at all. We knew it was going to get done. We weren't so hell-bent on healthcare. We just kind of figured it was going to be bipartisan when you talk tax reform and corporate tax reform and infrastructure spending. And then so you get a thing like Cohen maybe jumping ship, and the market starts to freak out a little bit. Nothing out of the usual. Guys, when you see these 1% days or in the market, like, that happens. Like, it happens a lot. And you see these big red candles, like, this happens all the time. So I be careful not to, sensationalize this stuff too much. Now, when I'm seeing this, it actually excites me because, we've been talking about UVXY. And, this morning everybody's freaking out. Oh, UVXY is expanding or rallying up. I just want you guys to know my UVXY put spread is trading at about $2 last time I checked. I paid $1.60 for it. So, A, I'm still in the green. B, if you didn't get in on the last one, I suggest taking a look at possibly fading this move here today. So go out a few weeks on a put spread and expect this to come down. I wholeheartedly expect this to come down. Now, I know I've been talking about UVXY a lot, but what you got to do here is look at so it's not based on the VIX. I just want everybody to know it's not based on spot VIX, okay? So it's not spot VIX. Because spot VIX is up 23% today, right? The UVXY tracks a lot with VXX, okay? If you notice, VXX is only up 11% today, and I know some of you guys are going, well, why is that? Well, because VXX does not track the spot VIX. VXX tracks the short-term VIX futures. So when you're trying to figure out what's happening there, you need to go to VIX Central. And VIX Central is going to show you the term structure on the VIX futures curve. So here's the front month and the back month. So these are the two that you got to worry about. So when you go here, you see that, okay, front month VIX futures are up 12%. So that's why VXX is up like it is. It's not about the spot VIX moving, it's about the VIX futures. Well, what's the difference between spot VIX and VIX futures? Well, what's the difference between spot Euro and Euro futures? This is a future that expires, so basically like an option, right? Similar. Expires on September 19th, so 33 days out. So this is going to fluctuate in relation to the spot VIX, certainly, but not in step with it. Just like your options prices aren't going to move in step with that, right? Okay, so this is what you want to look at. And you can look historical on this and go back and, learn as much as you want to learn that way. But what I'm going to tell you right now is that I am looking to fade this again. So this is exciting for me. I think this is another opportunity. Here, I called this the fade World War III. This is going to be, or short World War III, rather. I think this is setting up for a short Civil War II. And maybe we get another bit of volatility tomorrow morning, but I'm pretty sure over the weekend things are gonna ease. So lots of tension in the headlines right now, and no, I want to clarify, not double down. I'm leaving my original trade intact. People looking for new trades, go out a few weeks, and it's gonna work that way. Okay? All right. Now, back to the task at hand, my friend. Momo, ticker MOMO. So let's go ahead and take a look at the price consensus EPS surprise chart here on Zacks. Haven't been around that long. As always, the black line corresponds to the right y-axis, which is price. The left side is EPS, which corresponds to these multicolored lines, represent the evolution of our Zacks consensus estimates. Red arrows are earnings misses. Green arrows are earnings beats. So you'll see quite a bit of negativity here in Momo 2015, 2016, just kind of chopping all over. And then something happened where all of a sudden these guys figured out how to make some money, and these estimates have been continuing to the upside here. Kurt, wait till tomorrow morning. See where they're at tomorrow morning. I know holding overnight might make you nervous here, but tomorrow morning, because I think overnight you're going to see it fade a little bit. But if you're worried about it, roll it out. Try not to go that soon. Anyway, last week I was saying that was a little too soon. I need to know your strikes, though. We can talk about it in the chat. Anyway, let's so we see this growth in Momo on the EPS side. We see it's beat. What's behind this? Let's look at the detailed estimates page. Right now there are 3. They're going to report on the 22nd. Remember, we got the rest of the trading day. Today, we got tomorrow. You still got Monday. Because these guys are, I think, before the market on Tuesday. Let's look at these revenue growth numbers. These are pretty nice here. Current quarter revenue growth, 193.9%. Next quarter, 102.49. Current year number looks like 127.86. Next year is going to slow to 41.16, but that's still pretty darn good. If you look on the EPS side, that's translated to a huge jump in EPS for the current quarter, up 250%. Next quarter looks like 63%. Current year number rounded out about 101.41. Next year, 46% growth. Huge growth numbers. EPS following, but here's the thing. We've only got one analyst over the course of the last 60 days that have increased their earnings estimate. So that's why it's a 3. And the overall effect to the consensus hasn't been much. 27, 25, 28, 30, 29, 31. 121 up to 143 for the current year here, though. And next year's gone from 174 up to 209. So nice growth in the EPS numbers, and that's helping to support the price, obviously, and the move that we've seen. And they're coming off a string of surprises here. So lots of surprises to the upside. That should be good, okay? Now let's dig into the G14 classified type stuff. Now I got the revenue up here just to show historically what's happened. So 2015 almost 200% revenue growth. 2016 312, 2017 127, and 28 looks like 41. So very solid revenue growth here over the last several years. How did that translate over to the EPS side of things? Got 100% EPS growth in 2015. Huge number here. But that was sort of just as they were coming into being profitable. And then they've doubled that number this year. And then on out to 2018, 2019, looks like 46 and 38% growth. So still huge growth. Chinese mobile social gaming. Big, huge market over there, okay? Let's look at the detailed or consolidated surprise sheet here. See what these guys have been doing on earnings. Let's kind of keep this in the back of our minds. Last quarter, they had it rough. The quarter before, up almost 30%. A negative 12 in September. Non-event in June, 8%, 7%. So flat out, these guys move on earnings, okay? For the most part, they're moving. So we should be looking for some movement out of them as well. Let's go to the side-by-side view rather than the stacked view. And again, we're going to have to go out to the 25th of August to make sure we get this earnings report in here. 44.73. Yeah. Let's do the 44.50s. Bust out the handy dandy calculator. Let's see what this looks like. At the money call, 240 by 260. We're going to call that 250. On the put side, 195 by 215. We'll call that 205. Looking for $4.55 out of a 44.50. Looking for more than 10% on this one. Trevor, I don't think that the Spain attack is going to affect a Chinese mobile social gaming company. No, I don't. I think what's happening today is everybody's drawn for straws. The market's down, so now every little event that comes out today is going to be exacerbated to the utmost. That's exactly what's happening today. You're going to read some stupid headlines today, trust me, if you haven't already. Okay. So let's go out to September, see what we got. These guys do move. And I've had them in home run, and they've moved a lot since we've had them in home run. All right. Let's get vertical, guys. If these guys are going to move, 10% to the upside, that means these 50s. Let's get back on this chart. Okay? Now, they've had a tough time getting up above 46.50. Came all the way down to 35 here. It's a very wide channel. Very wide channel. And then you got a little move to the 50-day here. Met with a bid, so that's good. You got money flows that have remained positive for the most part. Got a little crossover on the CCI. All of this stuff. So, I think it's going to be one of those situations where if it gets up above this 52-week high, it's not going to stall out, right? it's going to push 50s for sure, if not further, if it really breaks out, right? Look at what happened this quarter. Up near the highs, I report, boom, they're off to the races. An entirely different trading range. So the 50-day, I think, should provide some support to the downside. But 50s, obviously, I think is a decent place that this thing could go on the upside. All right. So let's get back to this. So here I want to look at the 45-50 call spread. This is going out. This is going out to September 15th. Going long, the $50 call is going to cost $2.98. Simultaneously selling going long, the $45 call is going to cost $2.98. Simultaneously selling the 50, you're going to get back $125. So that's $173. $173 is the net outlay. The difference in the strike price is $5 minus that $173 is $327. You can make a $173 or 190%. That's a pretty good payoff. A very good payoff if you are bullish. So I think if you're bullish, you got to be bold. So I'm going to say a bull debit is long September 15, 45-50 call spread for a 173 net debit. You got to get aggressive because if the thing goes to the upside, it's going to blow out the top. It's not just going to kind of linger there an inch higher. It's going to blow it out and it's going to run. On the flip side, if the bottom falls out, definitely the 40s, no question. If we had more, I'll be honest with you guys, if we had more strikes in here, this would be a lot cuter. I'd get in there and really be able to cut this up for us better, but we just don't have the strikes. I will show you a different strategy, though, after I put this together. So the bears buy those 45s for 303, sell the 40s for 110. You got 193 is your net outlay here. $5 still the difference in strike prices minus that 193 is 307, or you can make 160%. And what the bears would need is shares to sit under 40 bucks at expiration. Bear debit is long September 15th. It's 15th. I put 16 on the last one, but you guys should know. 45-40 put spread, 193 net debit. So it will probably even get worse. On a bad report, I don't think the 50-day is going to hold it. But I am encouraged that they came in and bought this 50-day ahead of this earnings report. And again, butting up against this top part. This seems, I'm going to be bullish here heading into this earnings report. I like the bull debit. I'm going to be more aggressive and go with the bull debit. Now I want to look at one more thing though. And that's if we have some better strikes in this 8th expiration. And I know we do, and we've had that before. We talked about that the other day, I think, with John Deere, right? Where this is going to give you more flexibility. So if you don't want to go all the way up to the 50, you can still pull the halvesy here, gents, where you do the 45, and then we're not going to go to the 50. We'll just go to the 47.50, okay? This is pretty easy. It's going to cost you $1. Your upside is 150. Okay? So you can make 150% on that call spread by buying the 45s, selling the 47.50s. Obviously, it's a week less, but it also doesn't go out as far to the upside, right? So you would capture less of the upside. I just don't think, I think if it gets to 47.50, it gets to 50. That's how I look at it. But you can reel it in a little bit there. The other thing you can do is you can sell some out of the money put spreads if you'd like. Let's go up into this front week and see what's happening. Let's see, 44.68s. So we can go, I thought it was going to give me all of it. Oh, let's show all. And if you want to sell put spreads underneath that 50-day moving average, you're not going to get much money for it. Going out under 40, you're only going to get 17 cents. I'm sorry, 13 cents. So not a lot of bang for your buck, guys. Because you're going to have 13 cents and 87 cents at risk. You're going to make 15%. Selling out underneath that 50-day. I wouldn't do that with Momo, just because I don't think that this is a situation that's going to end in a sideways move or even a move that's restricted. I think that this thing either really blows it out to the upside or really blows it down out to the downside. I don't think we stick around. And people go, well, Dave, then why aren't we just doing the the at the money straddle then? Because I have a bullish bias overall for the stock, right? I've had it in a home run for a while. I've seen it, and this sort of move where it butted up, and then now it's still looking for that reason why. I think this earnings report is going to be the reason why that this thing goes to the next level. I'm really hoping it does, of course. And Alibaba had a decent report today. Similar situation with the Alibaba. Now, the thing about Alibaba that made me nervous is just the run-up and then the stop. But here, the run-up, and then it butted against this top. And like I said with Alibaba, if it blows through it, it's going to go much higher. And it did. So I think Momo has solid momentum here. And if you're looking in these actual numbers, it's not just oh my gosh, look how far it's gone, but we can see the actual estimates, the actual numbers for the revenues, and it's good. It's solid. Okay. Solid stuff. All right, gents. That's all I got here for Momo. I'm obviously. Oh wait, no, it's not all I have. Hang on. Trade that pays is bull debit. Okay, and I want to give you a lotto on this for sure. So the lotto on these guys, you can go out to the 25th. That's fine. Is them blowing out through the upside. Look at how expensive. I mean, it cost you 55 cents for the 50s. Think about that. 10% out, and you're still paying 65 cents. That's expensive, isn't it? Wow. This is what you guys can do, though. Market's pricing in around here. The 50s for 65, the 51s for 50. That's a ways out, guys. That's a ways out. That's expensive. If you're really going to be aggressive, I think what you got to do is some sort of out-of-the-money call spread. 48s. I mean, how far could this go? I'm surprised. Look at how much. There's still a bid all the way out here. 51s. The 52s. Look at the 52s. Look at the 48-52 lotto call spread. 110 for the 48. You're going to get back 38 cents, 72. Four and a half times your money if that happens. I don't know, guys. These are expensive. I don't know if I want to mess around with this. This is a lot. This is the 25th, August 25th. These are a lot more expensive than I thought they would be this far out. If you think about it, $45, so 20% is 54, and they still got you paying for the 54s. These are expensive, gents. If you're going to do it, try and get some kind of call spread out of the money. Maybe if you went 50-54. The 50-54 is going to cost... Or the 50-53. Yeah, I mean, this is just so far out of the money, guys. I don't know. I think the lotto's too expensive on Momo, but if you want to do it, do something like this, okay? Because this way, 37 cents, and you can make, you know, so 65 minus 28, it's your 37 cents, right? Difference in strike prices is $3 minus the 37. It's $2.63. 37. So 7 times your money, but the thing would have to go to 53, like 20%. That's a huge move. It's up to you though. I'm passing on any sort of lotto thing on this, just so you know. All right. I just don't see it. To the downside, you might be better off. You might be better off buying the 40 put. They're cheaper on the put side than it is on the call side. So remember what we're talking about, like a one-off event that may possibly happen. And yeah, you know what? Dr. Paul brings up an interesting point that I didn't mention. That actually, I'm glad you brought that up, guys. When we're doing these, specifically on these lottos that we're talking about, wait till the day of. Right? So if these guys are going to report Tuesday morning, wait until Monday afternoon to do any of your lotto thing. There's no reason that you should be paying for time on one of those lotto plays, okay? So you wait, see where the stock's trading at that day, and then that's where you go ahead and put your move. Looking at this though, I would look for a lotto on the downside. Just because that's what these are about, you know, that bang for my buck in case it doesn't work. Okay, so so there you go, guys. All right, that's all I got. Tomorrow morning, what are we looking at? AMAT? What's happening with AMAT today? You know, it would take me a whole show to figure out something for AMAT here, Jeff. And I've had AMAT. I think I had it in Momo. And I was trying to get back in again, but it's just broken. Like the whole, not AMAT in particular, but everything semiconductor related, just not operating the way that it should, because we've still got this. I mean, this is just getting so messy now. We're worried we're going to have a trade war with China. There's just a lot of worries and angst and anxiety and things that people are stressing out about right now that will pass. Like it will pass. But right now, it's just, everything's so hairy. It makes it frustrating, let me tell you, for guys like me. I just try and cut through it and say, you know what, the market's we're gonna, you know, prevail out of this. Right? Things are gonna make sense again. It's just the way today's day and age, man. It's just things, these little like fears sprout up so quickly and just burn like wildfire. And then the next day, it's like we forget about it, you know. So, all right, guys. Tomorrow morning, you can bet that I'm going to be talking UVXY. I'm also going to be talking deer. We're also going to be talking the euro. And we're going to talk the yen. And we're going to talk whatever else you guys want to talk about. Probably Baba. So we're going to go hunting tomorrow morning. Hopefully find something good for you. And that's it, man. That's all I got for you folks. So tomorrow morning, 9 a.m., let's talk turkey. Maybe find a trade or two that we can make some money on. And we'll go from that. All right? So thanks so much for hanging out with me here today on Zach's Live Trader. I'm going to send out the GBU. It's about to be up and running and good to go. And I'll talk to you folks mañana. Have a good one, guys.